Yo, what is going on, guys? In this video, I'm going to be talking about how one candle can make you profitable and how I'm using literally one type of candle along with other things, but primarily one candle to understand the market and understand my entries in such a clear way that I wish me 4 years ago actually understood. And that's why I'm making this video. I'm actually on a trip right now, so I'm going to be traveling while this video is out and you're watching this. But I just want to put this sauce out there. I just want to make sure you guys could see this. And we do actually have a completely free Discord where we post every single trade we take with a breakdown like this. If you guys are interested in joining, and also a free complete course that we offer in the Discord as well, I'll put the link in the description so you can join and DM me any single questions you have through Discord. We are growing a crazy community in here with a ton of people on here. We have a complete course made in-house by our homie and just a bunch of stuff for you to check out. So if that's interesting for you, just go ahead and check the link in the description and join up. But enough yapping, let's get into this video. I'm gonna make it fairly short, probably like 10 minutes or so. Just kind of talking about how this one candle basically changed the way I trade forever. So the first thing we're gonna do, I'm gonna break it down into a few steps. First thing, we're gonna go into the 4-hour time frame. This is gonna be a 4-hour candle that we're gonna be looking at, and specifically the 4-hour. Technically, it can happen at any 4-hour open. I just trade this one because it has the most volume. It's the one at 10 a.m. Eastern New York time, right after the 9:30 market open. So it's going to be the 4-hour candle open. What are we going to go and do with that? Let's go to the 4-hour right here. Boom. We're on the 4-hour. Let's go ahead and find that point that I was showing you from a trade that the team took. There's a trade that the team took a couple of, I think, a week or two ago. And it's just a beautiful example. I'm going to delete all this. All right. So once we're on the 4-hour time frame, what are we going to go ahead and do? On the 4-hour time frame, we're going to look for that 10 a.m. Let's say we're trading. We're going to be trading this next 10 a.m. candle. So we can't actually see past this, okay? We can only see up to this candle right here on the right side, right? So ignore this one. This is the one that we want to trade. What do we know about candle anatomy? First off, before we deep dive into candle anatomy, we need to figure out what type of candle we are expecting. Are we expecting a bullish candle or bearish candle for the next 4 hours? How do we actually do that? So the first step, I'm going to write it down here. We're going to do this all on the 4-hour time frame, by the way. First step, what candle do we expect? What candle do we expect? So obviously, if we go to the 4-hour time frame, we see right here, we are in a bullish structure currently, right? Up until this point, we're bullish. We have higher highs, higher low, higher high, higher low. What's another thing that is telling me? We are also respecting imbalances as we go up, right here. Boom, boom. We're not fading any of them. We're not closing below any of them. We're respecting them. We're pushing up. We retrace into it, fill the imbalance. Push up, retrace into it, fill the imbalance. Push up again, retrace into it. What is this telling us? Most likely, more likely than not, the next draw where price is likely to be attracted to is going to be these highs right here. Because what do we know about bullish structure is if this was the last high generated and we are now retraced, where is price next likely to hit in a bullish trend? This high right here. Because if it's going to make another higher high, first it has to take out this. It can make a higher high an inch above it, an inch above it, or right on it. But if we're in a bullish trend and we're going to make a higher high, we have to take out this high. So that is the target. That is the draw. So now we have completed step 2, figuring out where do we expect the candle to go. That is step 2. So what candle do we expect? Bullish. Okay. How far? How far bullish? To the previous high. So the one that we're currently looking at, this is the last high generated right here. We're looking for that candle to take that out. Now, what do we know about candle anatomy? The third step. Where do we retrace to? Because obviously we want to buy in a discount. We want to buy at a good price so we can get a good move, so we don't get manipulated and stopped out of our trade before the actual move up happens. Because as we all know, before we go higher, we must go lower. That's just how trends work, right? That's exactly how trends work. We can see it literally here. We go up, we go down, we go up, we go down. So what are we looking at here? We mark out our imbalances where price is likely to retrace into and deliver off of. So a fair value gap, as we know, the wick before the big candle. So a big candle that displaces, we see this empty space between the previous candle and the candle that comes after. That is the fair value gap that we're going to be drawing out. Boom, to here, and then draw it out. So we're going from here to here. I'm going to change the color, turn it blue. Now, as we see, we've seen this pattern throughout. Okay, we've seen this pattern throughout the entire trend up. So we're just expecting price to continue if we're still in a bullish trend, right? So what do? We go up, push down. Okay, respect it. We don't close it below. We go up, we push down again. We fill the entire imbalance, and just how we did here. Fill the entire imbalance, and then we push back up. Now, this is the next 4-hour candle close that I'm looking for. What do we know about candle anatomy? Again, we must go lower before we go higher. We always, almost always, when we generate a candle, candles have wicks. If we're expecting a bullish candle, we're expecting an open. So the open of the candle. We're expecting a low to be put in. So a wick of a candle. And we're expecting a high to be put in before we get a close. Okay, so an OLH, see, candle, open, low, high, close. So we're going to open. We're going to put in a low. What the hell is this? And then we're going to go ahead and put in a high. And then finally, we're going to close. That's just the order of a bullish candle, okay? Now, sometimes we don't put in a wick at all, and we just continue up. Depends on the time. Depends if there's news that just pushes the candle straight up. But I'm talking about a high-quality setup. If you don't get these things, then I'm just not going to take a trade, okay? At first, I want to see that low get put in. Sorry, I'm yapping a lot. All right, so again, if this helps out at all, and I'm about to finish explaining it, please leave a like and subscribe. It will help out and mean the world to me. And basically, just help me out. And join the free Discord if you guys want to see us trade live every single day as well. We actually have a 7-day free trial. If you want to sign up, it's completely free. And you can actually trade live with the team. It's not just me. It's other people that make more money than me too. And we all trade live in a call, and you can talk and everything. So if that's something interesting to you, go ahead and check the link in the description. Enough yapping. Let's get back into it. So we get an open, low, high, close. Now, if we go into the lower time frame, this is where we find the entry, bro. So since this is a 4-hour gap, we're going to go down to a lower time frame. Let's go to the 3-minute. I remember this entry was on the 3. And the team took this. So we have the gap, right? We have the gap. We're going to extend it out. What happens at 10 a.m., boys? What happens at 10 a.m.? 10 a.m. opens. We dump. We take out internal liquidity right here. Boom. We take out a sell side. We also took out buy side. So we're in some chop sheet right now. But I don't really care about this liquidity. I mainly care about the anatomy of that candle. We're expecting a bullish candle. We're expecting price to draw to these highs that we marked out already. So all we need to do is snipe an entry. Now, I'm not going to get in on the way up because first we need a retracement. We must go lower before we go higher. So what am I looking for? 2 things. And this is part of my entry model video, but I'm going to sneak it in here for you guys. So drop a like and subscribe. 2 real quick things. I'm not going to go too in depth. I've made a bunch of videos on it. Just DM me in the free Discord if you have any questions. But basically, inverse fair value gap from here to here. We finally get a closure above. I'm going to color this one purple for y'all. Finally get a closure above this bearish fair value gap, meaning we are now flipping bullish. But the last thing I want to see is a change in the state of delivery. Where was the last leg down? It was here, this wick down right here. Where did it deliver off of? The body of this red candle. So once we get a closure above the body of this red candle, that's it. Oh my God. I'm not editing that out. Anyways, yeah, bless me in the comments, you feel me? Anyways, close up there. Now I'm ready to long this. I have now put it in a protected low where I can safely put my stop loss and be more confident in that level rather than just putting my stop rather than just putting my stop in one of these highs created by an upwards trend, I want to put mine in one that was created in a lower time frame downwards trend retracement before we push back up. And now the key to all of this is literally just waiting for confirmation. I'm not going to enter in here, 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 here. No, I am waiting for confirmation. That is going to give you the highest probability trades. I stopped taking low probability trades because they literally make no sense. Why am I going to spam trades that don't make no sense? Start trading like a sniper and you're going to start hitting sniper entries and make more bread, bro. All right. So that's how I'm going to scale my accounts this year to the next level, from 5 figures last year that I made to over 6 figures soon. Okay, this is my plan of action. This is how I'm going to enter the markets. Again, I have tons of videos on my YouTube breaking this down and tons of info on the free Discord breaking all this stuff down. So closure above, entry, long position, stops at these lows right here. Below this one mainly is the one I care about. Because if we break through this anyway, we're most likely going to get stopped out. So just in this area. And then we're targeting those highs from the left side, right? We're targeting those highs from the left side. So right there, that's over a 2R. So it depends how you put your stop. If you have a bigger stop, it's still a 2R. So that's it, bro. Expect manipulation before distribution. This is called AMD. I learned that a bit ago. So first we accumulate, we manipulate down, take out lows, and then we distribute to the upside. So that's pretty much it. Again, if this helped out at all, please leave a nice comment. It means the world to me. I repost all the comments on my Instagram, just anyone that's nice. And I really appreciate you guys watching this video. Join the free Discord, and I'll see you guys in there. All right, peace.